Down over 2% following today's highly anticipated hardware event up in Cupertino, California. The tech giant announcing the new iPhone 15 and Apple Watch Series 9 set to be released next Friday, September 22nd. Joining me now to react, Wedbush's Dan Ives covers the company, as you know, and CIC Wealth's Malcolm Ethridge. Malcolm is also a CNBC contributor. Gentlemen, it's good to see you here just off the beach. Dan Ives, I'll turn to you first. Your first reaction to what we learned today from Apple, and the stock's been selling off into the event and now selling off on the backside too.
Yeah, no doubt. I mean, knee-jerk reaction, I think, that we've seen, especially with the China worries. But if you look, I think it's a flex the muscles moment. I mean, you're getting the iPhone 15 Pro on time despite worries, September 22nd. The price increase in terms of the Pro, they did not do. And I think this is important. That's something that shows more and more pricing power from a chip perspective. And it comes down to, I believe this is another share gain. And what I view as a mini super cycle that's going to play out, despite many of the bears, skepticism building.
I know, but you say many of the bears. I always want to come back to you on that, because many of the bears, are there really many bears on Apple? And the concerns that exist are legit. You would think, I mean, if I could read you the statistics. I mean, the shares are coming off the second worst week of the year, 3 straight quarters of year-over-year revenue declines. Year-over-year iPhone revenue has declined in 2 of the past 3 quarters. That's not knee-jerk. Those are real numbers.
Yeah, and in my opinion, this is really just the transition to the next stage of the growth story in Cupertino. Services now starting to uptick to double-digit growth. And I think the most important thing, 25% of the install base is not upgraded to iPhone in 4+ years. And I think when you look at it, we sit here 6-9 months from now and look at more and more share gains in China, not the opposite. That's our call.
So you thought there was going to be an increase of $100. You didn't really get that other than for the Pro Max. Are you surprised? Because you said, as the rumors were swirling that this might happen, that it would be good for Apple if they did that. Well, they didn't do it.
Why didn't they split the hair? I mean, on the Pro Max, I think you're going to see more and more, especially in China and the U.S., heavier going toward Pro Max because of the camera technology. Not raising Pro Max on $100, it's a bit of a surprise, but I think right now it's that balancing act for Cook and Cupertino, especially given the macro. And this is something from a unit perspective that actually could be a positive. And I think it shows more and more confidence in terms of what they're doing and ultimately controlling their own ecosystem.
Does it reverse those trends that have been trending in the wrong direction in terms of iPhone revenues of late? I mean, I know the importance of, the next quarter. The December quarter is really the bread and butter. This one, okay, they'll do some numbers because the phones and the other stuff is rolling out too. But is it enough to reverse those declines?
I think it is, because I think when you combine with the carrier discounts we're going to see, share gains in China, especially with Huawei 2 generations behind Apple, 300 bips a share that we've seen Apple in the last year and a half. And I believe from a unit perspective, mid-single digit type unit growth plus ASP is lifting. That's the perfect combination, which is why we believe we sit here a year from now, Apple is toward $3.5 trillion, not the opposite.
Okay, Malcolm, it's good to see you, as I mentioned. Apple shareholder?
Yeah.
What do you make? Is he too optimistic? You don't find people who are more bullish than Dan Ives on Apple. Let's just be clear.
I hate to say it because I like him, because Dan's my guy, but I think he's a little bit too optimistic right now on the iPhone cycle. I think a lot of shareholders feel like I do, that we were hoping / expecting to get something better than a new iPhone and, vegan leather now on the Apple Watch. Like, that isn't really going to move the needle at this point. It's services revenue that they've proved is where the gross margins really live. And so can we get a confirmation of a partnership with American Express leaving Goldman Sachs? That's going to lead us to Apple Finance really moving the needle as far as services. Can we get the iPhone to no longer be 52% of the revenue mix? That's really what I, as a long-term shareholder, care about. Going from the 14 to the 15, the 15 to the 16, so forth and so on, really isn't going to move the needle anymore, because the iPhone has become already a utility. It's no longer a purchase that you make just because you want to. It's a necessity at this point. They won that battle. But what can they do beyond it is what I, as a shareholder, am looking for.
Do they really even have to do anything beyond that? You really think that, just because you mentioned it, partnerships with another financial institution is really going to be anything more than an incremental move forward, right? It's a services business, as you said, is like a Fortune 50 company all by itself.
Sure.
And this is an iPhone company, first, second, third, and 20th.
But I don't think they should be long term. I think what they've already proven is $10 billion in deposits with the Goldman Sachs partnership, the Apple savings accounts in just, 3-4 months? that showed where the demand really is. And all Apple really has to do is add its marketing wizardry, its secret sauce as far as branding is concerned to a banking product that there's not a large lift, and Apple doesn't have to compete on net interest margin like a traditional bank does. So there's tons of opportunity there for them to really take some share away from traditional banks. And I think that's where they should be leaning to long term, because it's one of the only markets there that they can disrupt at the size that they are at $2.8 trillion or whatever we're sitting at today.
You want to just address that before we go? It's good points from a shareholder.
Of course, great points as always from Malcolm. The monetization of Cupertino has just begun. When you look at services, you look at e-finance, where I view it ultimately be AI in 2025, this is just the middle stages of, I think, the next growth story that Cupertino and Cook are going to see.
We'll leave it there. Enjoy the rest of the conference. Dan Ives, Malcolm Etheridge. We'll see you soon. We'll see you back at Post 9.